Hello, very good evening. This is Shark. Well, looking at Sira cables, as promised about the video. Just now I got the time to go through some of the recent posts. Yes, I promised a couple of days ago, and I'm looking at the full history here, the 10-year history. Okay. What I'm seeing here, it's very interesting. If you look at it, it's very important to have to take a view, bird's eye view of this chart or the price actions. Okay. Now, when I look at the 10-year history here, we are looking at the moving average, which is the yellow line here. Okay, see the price whenever it moves up. Okay, whenever it moves up or moves further, okay, or away from the moving average, it comes back. Look at here, comes down here, and then it retraces. Okay, so it's always like a moving average friendly share. Okay, now look at this, it moved, okay, and then it came to test the moving average, then again and came, and then it started moving. Have a look at this. Now the thing is that this started hitting around 2 rupees and comes down again to test the moving average. Okay, look at this, and comes back. Look at this here. Now if you look at here, 390, yes, it went to around 640, but look where it came closer to moving average and came even here as well, 3. See here, it went off the moving average, but it falls back. Look here, again falls back, okay, and tests, and when it goes down, and then it retraces back again to the moving average. So it has been trading along the moving average. This is what I'm seeing. See, goes up, comes back again to the moving average, and it's been like this. Okay, now this is a 10-year history. Let's fast forward 5 years. Okay, this is how it worked. Now see here, went to 240, 250. Okay, people who bought 250 waiting for the opportunity, but some they got the opportunity around 2. See, people, I'm sure some people entered here. Okay, see, it came, but it's not quite, okay, it's not quite closer to the moving average. Look at here, we are far off the moving average. So in my view, that it's much safer to wait until the price falls back to the moving average. Okay, so we should have this moving average as a cushion, okay, for the free fall of this price. Now I did some calculation. Okay, given the current, I think, September earnings, annualized earnings, I'm talking about, I think one should not pay more than 5. So if anybody's paying 5, that means he's paying at par. So always we should have what you call a leeway. Okay, that is to keep some provisions for error of judgment. Okay, for me it's better that if you see here this bullish, it's very it's very risky to enter at this price, 450. We might see gradually we might see a cooling off period, okay, after a steep climb like this. it's always better to stay away rather than entering. Okay, so my opinion for Sira cables would be, it tested 5. Well, if it moves goes beyond the resistance, which is 5 rupee, okay, then we might have a limited opportunity to do a trading, but not for a long term based on around if you enter here, because the valuation is such that for me doesn't worth the current earnings, annualized earnings, which one should not pay more than $5. So if you are not going to pay more than 5, that means you should not be entering at 460. I assume that you get my message here. Now, any breakout to the downside, we are on a free fall, okay, until the moving average. So we are around 320. Okay, some can argue otherwise, that it might not fall to 320, but for me, I prefer to wait, because the past price actions, if you've seen, okay, once the price start appreciating a lot and started moving off the moving average, it comes back again. Okay, now the other interesting thing on Sira cables is this. Okay, let us fast forward for another couple of years here. Look at this. Now this is what we call a negative divergence. This might be early stages of a negative divergence. Of course we might see, and then we might see this moving off again. But have a look at this. Okay, this is it. For me, it looks like an artificial, this is my opinion, okay, it looks like an artificial appreciation here. I don't know what they expect. They are going to declare some dividends. I have not studied all this, okay, so forgive me for the for my lack of knowledge on Sira cables. But on a technical side, if I'm looking at this particular trade, okay, this is called a negative divergence. The price, this is the high point, okay, and we have a higher high. Got the idea? Okay, we have a high, and this is called a higher high. Okay, now in negative divergence, you will find this is the tip of the MACD. See, we have a high and we come here to a lower high. So MACD and the price of the share moves in opposite direction. Okay, you got the thing. So for me, it's risky for me to enter anything here. If I have entered somewhere here, it's my position would be to close around 480 and wait until this cools off for a considerable few months or so, until this falls back to the moving average and goes range bound, okay, for a couple of, and then we wait for another breakout option. That would bring in fresh cash inflow into the share to push further up. So for me at the moment, I'm what I would say, I would stay out of this particular share, because it's already appreciated and it looks overheated for me. We might, what we see here, the VIX, okay, it gives what you call early indication of a reversal. You see here, that means the price is not able to close on top. We might see, look at here, always when you find there are ample examples. Look at here, it's a wick, okay, here we could not find here, but look at this here. See, once you see this type of closing candles, it's always imminent a reversal. Okay, we are looking for an imminent reversal. that means it's not able to keep up with the momentum, with the phase. Okay, so we might see some kind of a correction, a healthy correction taking place in the coming months. Like I told you, value wise, one should not pay more than $5 based on the current earnings. So if you are going to buy at 5, that means you are not getting this particular share at a discount. So if you enter, always you have to keep some provision for your calculation errors as discount, so that you have a leeway to exit any given time. So for me, my bias would be to stay out on this particular share until such time that this price moves, corrects itself towards the moving average, where as it stands around 320 now. Okay, so that would give us a better opportunity, a safer entry. I think it would be the most suitable what do you call decision right now. So we are seeing a negative divergence. Any moment this could come down. We don't know for sure, so until we see this one. So it's always good to watch the share. If you are interested on Sira cables, watch this one to see whether it goes and breaks out over 5. And always important, even if it breaks out, it has to close above 5, okay, with high volume. So you need to have a confirmation of volume with high volume, plus the price should not test 5, okay, it has to close above 5. Okay, so that's the idea on a trade if you are going to enter technically. Right now there is no trade on this one. Much better to stay away and wait until this cools off, goes range bound, and then we can have we can take a look at it again in couple of, say, weeks or months. That's it. I hope that's it from me. I hope I have covered everything, and for those who did not understand what I'm trying to say, just drop in a couple of lines, shoot out some posts in that respective community. I'll have a look and try to reply on those. So thanks. This is Shark.